I don't really understand it. I think it's an incredible technological advance in terms of showing what we can do, but I don't know whether we know what happens. And I was listening, who was it the other day that was, who knows a lot about technology? He just says that, it scares him. Well, if it scares him, it scares me in terms of the possibilities of it. I mean, we've done amazing things, like we figured out how to create an atom bomb back in 1945. I didn't know what an atom was or anything, but Einstein told me it was going to change the world, and it changed the world. So I don't want to change the world too many times without having some idea of the consequences of it. And I think this is extraordinary, but I don't know what.
Hi everyone, this is Kaden Chung from VIA Value Investing Academy. Thanks for joining another evening of our deep dive series. Now, by the way, you would have watched a video about Warren Buffett talking about AI or artificial intelligence. Hi Jerry as well as Jeffrey Wee. Now, so I'm going to put up my slide right now. Make sure that I can share screen and you can see. Yeah, my slide is up right now. If you are able to see my slide, let me see here. And then you could hear my voice. Is it okay? Just type 1 in the chat so that I know everything is fine, right? Let me just, because tonight I'm using a new PC, so I want to make sure that everything runs smoothly. Okay, good. You should be able to see this slide. Before I start, let me just check to make sure that my pen is also working. Yep, so by the way, the video is contributed by CNBC Television, so credit gives it to them. I noticed they have a huge number of subscribers of 2.41 million subscribers. That's really huge. So again, thanks Warren Buffett for sharing his thought. So before I go into the actual topic for today, let me just do some quick intro. And for my intro, I'm going to talk about this cycle called the hype cycle. Yeah. So if you look at the slide over here, you should be able to see this sort of S-curve thing. It goes up, comes down, and then eventually it plateaus off. Now, I think before I start, if you rewind back, if you could travel back in time, maybe to about 2, 3, or even 4 years ago, you will know that the most recent hype, I think, start off with things called Bitcoin, cryptocurrency. I think that was the earliest hype, at least about 2, 3 years ago. And then people keep talking about this thing called decentralization or blockchain technology. So in the beginning, when this blockchain or decentralization or DeFi all this thing came out. Everybody talks about it, right? And then if you have a TikTok account, you see there are a lot of videos where people talk about different kind of Bitcoin or crypto that you should invest. And then their video is pretty simple, right? There's this guy with some music playing, and then he will pointing his fingers. So if you point here, maybe there's one Bitcoin that pops out. He points there, maybe Ethereum that pops out. So there are plenty of such videos a couple years ago. And then, of course, the so-called the crypto bubble burst, poof, and it became a crypto winter. So right now you see people don't really talk about crypto anymore. Once in a while people talk about it. So crypto was the very first hype. And then after that, it transitioned to NFTs, non-fungible tokens. So in our YouTube channel, in fact, we talk in detail, right, about non-fungible tokens as well. So these NFTs eventually also die off. So when crypto dies, these NFTs also die with it. So right now, you rarely hear people talk about NFTs. Then after that, it transitioned to the next phase, right? People talk about metaverse, partly because Mark Zuckerberg, the founder of Facebook or Meta, he said he wanted to transition his company into metaverse. And then, of course, he changed his company name from Facebook to metaverse. Then there's a hype about metaverse. Then you see ads that pops out saying that they're the guru in metaverse, you can make money on metaverse and so on. Then after that, recently, ChatGPT came out. Yeah, and then a lot of people are very fascinated. Right now, you can just type into the chat. Again, we have done this live before, and I've done a demo about ChatGPT. So people talk about ChatGPT. And then again, the ads will pop up. Oh, now you can make money out of ChatGPT. Then after ChatGPT, of course, it's a smaller subset of AI or artificial intelligence. Now people talk about it. So if you look back right now, people talk about AI, but years ago, people talk about crypto. So why don't people talk about crypto anymore? Yeah, interesting, huh? So let me just share with you this cycle called the hype cycle. And understanding this cycle relates to us as investors. At which point should we go in, right, to invest? So we have to understand this hype cycle before we take a plunge. And then when people talk about it, you quickly jump in and then I want to buy this and buy that. Huh? So the very first phase of this hype cycle that you can see over here, right? The first phase is called the technology trigger. Let me give some pointers. Huh? Yep. So in other words, people talk about certain things, but there is no commercially viable product yet. Yeah, commercially viable. So for example, ChatGPT, people talk about it, but people still do not know how to use it. Or blockchain, people talk about it, but how do you deploy blockchain, right? People are still not sure. Yeah, not sure, right? And then, of course, when new thing pops out, media want to get eyeballs, want to get traffic, they'll talk about it. Yeah, so the more hype they talk about it, yeah, their sponsor ads generate more money for them. So media, of course, generate excitement. And right now, not only media, influencers, whatever you call it, people talks about it. Yeah, so to drive traffic. So that is one technology trigger. A lot of hype, but still not sure whether things are functional, commercially viable. So the next phase, right, is called the peak of exaggerated. Now, pay attention to this adjective, right? Exaggerated expectation. Here, you first start off, yeah, very excited, but you push the hype to reach a certain peak. Now, at this point, the parent companies of the technology, it could be Microsoft, it could be, recently the news was NVIDIA. Do you notice? The CEO talks about it, hey, we're going to do this, we're going to do that, right? It further amplified their marketing around the product, generating excitement and raise expectation until it reaches a certain peak. Then, of course, this becomes a vicious cycle. People jumping here, yeah, I know it's true, and so on. Yeah, and more success stories are published and used as proof of a game-changing solution and so on. So that it reaches a peak. Yeah. Now, then the early signs of failure also begin from here. So even though it reaches a peak, yeah, people talks about it, but whether eventually will the product be carried through, not very sure. Then subsequently, right, reality kicks in. Reality kicks in. You go through this cycle where it starts to fall. So as soon as the reality kicks in, the technology begins to fail in real life situation. In other words, it didn't work. It didn't work. Oh yeah, by the way, there's another one. Maybe I could use another one. Maybe not so tech. Maybe medical tech. Right? It's called Theranos. In the very beginning, again, Elizabeth Holmes, right? Yeah, talk about a lot of interest about using one drop of blood. They can test all sorts of things using one drop. So a lot of hype, people jump in. You always follow this cycle. Then eventually, the reality kicks in. Things, they try to put it into the real test. Things doesn't seem to work. Whether it can be blockchain, NFTs, and so on. Yeah, and then many of these people who promoted promoted or canvas for this product eventually will become disillusion. So remember the expectation pushed until very high, then suddenly realize, hey, in reality, it doesn't deliver, at least based on the hype, right? Yeah. So, and then investment will start to withdraw, begin to withdraw, right? And then it reached the bottom, called the trough of disillusionment. Wow, this one sounds quite sad. Now you can see the arrow comes up, right? So if you relate this to any public listed company, same thing. Some companies pop up, say they got this, they got that, and then if you look at the arrows here, the price also goes up, Yeah, because expectation rise. People do not mind overpaying for something that probably could disrupt. Yeah, and then reality kicks in. It doesn't meet its expectation, so the share price start to drop. Investors start to exit. So now during this whole cycle, out of 10 maybe 8 or 9 fail, and then 1 or 2 make it. Yeah, then you see this path of enlightenment. This is like the 4th phase, right? Yeah, industry begins to learn lesson from the failure stage and then fine-tune to readjust the expectation as well as the product. Then after that, you can see 2nd, 3rd generation come in and then try to fix the previous 1st generation, and then things start to work. And it reaches the last phase, where the technologies are really fine-tuned and eventually things start to work, and then the mainstream adoption begins. Now, before I move on to the next slide, I purposely highlighted these 2 words, mainstream adoption. And the key word is this word, adoption. Yeah. Right now, there are, in order to make investors, or especially retail investors, very excited, like people talk about disruption. And interestingly, people who do not know about investing, the moment they hear disruption, they thought that the money will go up 10 times, 20 times, or 100 times. Yeah, so this keyword disruption sometimes can be very misleading. And later I'll talk about it more. So remember, this cycle is very important. Anyway, our video is pre-recorded, and this YouTube video, anytime when you need this, you can just screenshot. Yeah, very important, very important. So remember, I talked about the blockchain. You first start off this, and then Bitcoin, cryptos, and then NFTs. Right now, rarely people talk about this, because if you talk about this, people say you're lame, you're outdated, correct? Who talks about NFTs, right? Then after that, the metaverse, then after ChatGPT, after the AI. Now, I'm not very sure after AI what people talk about. Whenever some new things pop out, who knows, right? Who knows? So you realize that while the hype of certain things keep going, you still have to go to coffee shop and have a cup of coffee. You still have to go Sheng Siong, NTUC, Cold Storage to buy your things. Yeah, so it doesn't matter whether you make $10 from NFTs or Bitcoin, right? Or $10 from Sheng Siong. All monies are created equal. $10 made from either one of this, they all smells the same. So it doesn't matter what you invest in. But it only matters that you don't lose money, and then you still can make money. So this is a hype cycle, right? Now remember, just now I talked about the word adoption. So right now what I'm going to do is, the lady, right, who keep talking about disruptive is none other than this person called Cathy Wood. Yeah, Cathy Wood. Her name is called Cathy Wood. She likes to talk about how, our ARK funds has been investing in certain companies that are disruptive. Yeah, so if you pay attention to what she say, I think maybe easily one paragraph you find a few words on this disruptive. Yeah, so since you talk about disruptive, but are your returns from your ARK funds are disruptive? Yeah, versus S&P 500. So if you look at the since I think 2015 when the fund got started, right, until today, which is 2023, so her fund has been around for the past 7 years. Yeah, so did her fund really disrupt anything? Yep. So you look at the ROI, right? Yep. Since this period, first period until the end period, so the Vanguard, right, S&P 500 has been generating about 279% increase. Yeah, increase. Whereas the ARK fund is only 91. So this is almost 3 times here. Yeah. So even though people talk about disruptive and so on, but your results don't show that it's disruptive. So you have to be very careful buying to what people say. Yeah, because whether you make money or don't make money, right, or you underperform S&P 500, Cathy Wood sure make money out of you, because her job, right, is to talk about it. Yeah, so that you pass your hard-earned money to her, not her hard-earned money, right? It's your hard-earned money to her. So when you pass money to her, her asset under management, that means the money that she's managing increases. And then as long as she take a percent, such as 0.07% out of the millions and millions of funds, whether you become rich or not, that's not the key. The key is you become rich first. So we have to be very, very careful where you park your money. And to do that, you have to understand what you are doing. Not just invest based on hype. So now the question is, people talk about disruption. Yeah, people as in like Cathy Wood or sometimes YouTuber talk about disruption. But does it really matter? So what I'm going to do next is I will allow my colleague, right, to play this video, very short video. And Jeff Bezos, by the way, Jeff Bezos' net worth is definitely much more than Cathy Wood. So I want you to pay attention to what he say. Does this word disruption really matters? So here you go.
Invention is not disruptive. Only customer adoption is disruptive. At Amazon, we've invented a lot of things that customers did not care about at all. And believe me, they were not disruptive to anyone.
So, ladies and gentlemen, welcome back. So you can hear from Jeff Bezos, explaining the innovation, invention. Does disruption really matters? At the end of the day, he did say that the only thing that matters is really customer adoption. Because regardless of whatever you have created, invented, whatever, disruptive, if the customer do not use that, if the customer do not adopt whatever technology you call it, is plain useless. It's like creating an invention that no one is interested. Yeah. So remember, it's not about things that is being disruptive. It's whether that thing that's being created. Like for example, let's say the blockchain. Yeah, you can call it innovative. Yeah, sure. But how about the customer adoption? Do you see SMEs, let's say in Singapore, adopting blockchain? And then if you talk about NFTs, right? Do you see SMEs or even companies adopting NFTs? So not many. Yeah. So if not many people adopt these NFTs, but so does it really matter? Whatever you call it, NFT or FNT. Okay, huh? So tonight we're going to talk about predominantly two companies. One is called Palantir. Previously we have done a deep dive, but we're going to do some comparison between this Palantir and another company called C3.ai. Wow, sounds like Elon Musk's child, the name. Okay, C3.ai, right? Yeah. So before I start, let me just read the disclaimer first. Now remember, the case studies that we are going to show tonight is solely to illustrate the application of value investing methodology and various valuation methods in the context of real-life company. In this case, Palantir as well as the C3.ai. So remember, under those circumstances, does any of the information provided in the case studies tonight represent a recommendation to buy or sell? So remember, we do not take into account any one of you, your individual characteristic profile or risk appetite of any investor. So remember, in no event shall VIA or author be liable for any viewer's guess, third party of any damages of any kind. Yep, arising out of the content shared here. So remember, neither My Kinesis Investments, VIA or me and Hillary, right, are operated nor affiliated with any broker, dealer or financial advisor. Okay, good. Whew, quite a mouthful. So what I'm going to do is I'm going to hand over to Hillary, and Hillary has done a lot of work. Yeah, so Hillary, over to you. Thank you.
Hi, good evening everyone. Welcome back to another deep dive series, and tonight we'll be looking mainly into C3.ai because both of them, when you look at their products, it seems quite similar, but what is the difference between them? Especially recently when you saw the news that C3.ai stocks has been surging quite almost vertically in my opinion. So with that, tonight we will look into what is really C3.ai and is there any difference between this company with Palantir, which we have compared in our previous deep dive series? So let's jump right in. Give me a moment. I think I have some technical issues. Okay, sorry about the short technical issue. So let's jump right in to look at the business analysis of this company. So first off, so let's look at the company background for C3.ai. So it's known as C3.ai, or another name called C3.ai. So this is actually founded by this founder, Thomas Siebel, in 2009. And it actually went public just back in 2020 with the ticker symbol as AI. So what is this company really about? It's actually a software company that specializes in enterprise AI software. So when you say enterprise AI software, it actually means that they are using an AI software to help corporations to manage their data, to help them to do some predictive analysis. So this is what they actually do. And these are some of the AI technology that they use to help them to manage the softwares within the corporations. So we'll look deep further into what is really an enterprise AI. Okay, so here let's look at how does the enterprise AI actually works. So first off, the employees will put in the data into the software, such as like in text, in speeches, or in images. Then this software will help to process the data, whether they will interpret the data, and then next they might predict based on the data that's being fed. Then they will generate an outcome to say that whether is this data overall, is it a success or is it a failure? And finally, then they will help to assess based on all this data to their counterparts. And from then, with the data that they obtain, they are able to make a decision whether to improve the data or how they are going to manage the data. So these are some of the benefits for an enterprise AI, where they help to increase efficiency. Because imagine that last time, when there's a lot of data, there will be like, let's say for example, they need about 5 people to analyze the data, to manage the data. But with this software, AI software that's available, one person can easily manage 5 persons' workload. So in a way that it managed to increase the efficiency of the workload, and it has cost saving, because instead of hiring 5 people, you can easily hire 1 person to do all the work and just install the software. And also they allow to have a predictive capabilities. So what does this actually mean? Later we will look at one of the videos to see that how does this predictive capabilities able to help the employer to make a better decision based on the data that they've generated. Okay, so right now for C3.ai, they have actually about 4 types of AI software that is being listed on their website. So the first one is known as C3.ai applications, which means that this software can be used in various fields, like in customer relationship management, CRM, in sustainability, in supply chain, financial services, defense, and also property appraisal. So they can use this software to help them to manage their data and get some predictive models to help them to make a better decisions. And another one is a C3.ai platform. So this actually means that they have one platform that allows different types of teams within the corporation to work together. So here they are using this platform to work with the data and also generates the models to help them to make a better prediction based on the data. And the third one will be C3 Generative AI Product Suite. So this one, they are actually using a natural language, which means that something similar to ChatGPT to help them to work with data. Because last time, if someone wants to work with data, they need to have some computer science or computer background, like programming, for them to work with the data. But with this software, they're able to use like normal languages like what we speak when we are using ChatGPT to help them to manage the data. And next, the last one is C3.ai X Machina. So this one, they're actually using natural language to help them to build an AI model. Because last time, if we wanted to build an AI model, they need to know how to code and anything. But this one, a person without a coding background, they can easily build an AI model. They just drag and drop the platform to build the AI model that they want for their specific applications within the corporation. So these are the 4 main software that C3.ai actually offers. Okay, so now here we will look at a simple example of the application of a CRM. So here it shows that in a sales executive, they are able to help them to predict whether are they able to reach their sales target or not. If not, how are they going to solve this problem? And this software able to help them to provide a solution for them to see how they are able to close up the sales gap. So with that, I'll have my colleague to show this demo video, and please enjoy the video.
C3 AI CRM brings together data from internal and external sources with predictive analytics to deliver unparalleled customer intelligence, providing the insights you need to beat your plan. Let's look at C3 AI CRM from the perspective of a sales executive at a large manufacturer. You open C3 AI CRM to update your forecast and see you have a significant gap to plan. Your team is forecasting $900 million for the quarter, but as you review the C3 AI forecast, you see that your pipeline strength has decreased substantially over the weekend based on AI signals from your activities data, including email sentiment in meetings, pipeline data, including all insights from your CRM, news feeds, macroeconomic data, your service and supply chain data, and more. You notice that while sales activity and market factors are strong across the pipeline, supply chain challenges are driving customer dissatisfaction, which is putting your quarter at risk. Digging in further, you see that the problem seems to be isolated to the glass division. Specifically, Lily Stevenson, one of your all-star sales reps, accounts for much of your gap to plan. She's committed a major deal for windshields with AV Trucking, one of our biggest automotive customers, but the powerful machine learning models in C3 AI CRM indicate only a 27% chance of the opportunity closing in time. A quick look at the underlying AI evidence reveals why. Backordered products are driving customer dissatisfaction, as evidenced by an uptick in negative email sentiment, and Lily doesn't have the executive connections at AV Trucking that she needs to effectively manage the account through this turbulent period. Diving into this insight, C3 AI Sales Vision reveals that Lily is primarily connected to junior stakeholders at AV Trucking. To help turn this deal around, C3 AI Sales Vision guides you to Rick Brown, the Chief Procurement Officer at AV Trucking, as a potential champion for Lily to engage. But C3 AI Sales Vision doesn't just help you determine who to engage, it also shows you how to engage. With C3 AI Sales Vision, you can see that the head of your marketing team, Zoe, has a strong relationship with Rick. Even better, C3 AI CRM makes it easy for you to act on this insight immediately, without toggling between multiple apps. You add Zoe as an opportunity team member from C3 AI CRM and send a note asking her to introduce Lily and Rick. C3 AI CRM syncs these changes back to your transactional CRM immediately, so you don't have to worry about keeping all of your systems up to date. In minutes, you have identified and unblocked a key deal that was at risk, given your best rep the leverage she needs to succeed, and ensured the long-term satisfaction of one of your most important accounts. In C3 AI CRM, revenue acceleration and improved sales productivity are only ever if you...
Hi, welcome back. I hope you have enjoyed the demo video that is being presented by C3.ai, and I hope that you have learned more about how they actually use this software to help their customers to solve their everyday problems, because you can see that there's a sales gap they need to fill in, but last time the salespeople will have to crack their head on how they are going to fill up the sales gap. But with this software, they are able to know that what's the root cause of this, and they are able to find out like how are they going to mitigate this issue, and then who are the next person that is best help them to solve this issue. So with that, let's move on to the other aspects of the company. Okay, so here C3.ai actually works with Fortune 500 companies and also various industry leaders worldwide. So these are some of the industries that C3.ai is involved in, and most of their customers are in the oil and gas industry. Okay, so this is the customer base that I managed to get from their investors presentation slide, and we can see that they are involved in various industries in the commercial sense. So here they have a strategy known as lighthouse customer, which means that they approach industry leaders to show that how their software is going to help them to bring better value within their operations, and from there they are able to attract smaller customers to use their software. So let's look at who are their lighthouse customers. For example, in financial, there's Bank of America, Standard Chartered, and oil and gas, there's Baker Hill and also Shell. So these are some of the industry leaders within their own industry. So if they're able to use their software and create more values for their business operations, then they will be able to attract more customers, especially smaller customers, to use their software. So this is one of their strategies when they launch their IPO. Okay, so now let's look at how they actually generate their revenue. So for FY 2022, they actually generated about 253 million of revenue, where about 82% comes from subscription. So here subscription means that the customer, they actually subscribe to the software to use for a few years, like maybe 3 years, 5 years, and that is based on the usage-based runtime fee. And for professional services, they define it as like an on-site or remote specific task. That means based on task oriented. So it's a fixed fee engagement. It's a one-time off fee. And then in geographical, we can see that almost 78% of their revenue actually generated from United States, followed by Europe, Middle East, and Africa, and also Asia Pacific. So we can see that a huge chunk of their revenue is actually generated within the US. Okay, so now here is the Q4 2022, but do mind you that this is actually a preliminary result. So preliminary result means that the results that has not been audited is not finalized yet. So the finalized result will only be released tomorrow, which is 31st May. So here, what caught the hype during this result was being released is because they mentioned that their revenue actually beat their expectations. However, the company is actually still still have loss from their operations. That means they are still losing money for the past 3 quarters. And overall, their fiscal year is until April. So for the past year, their revenue says that they are able to beat their previous expectations, but it's still encountering losses. And here is what they say, that the financial results will only be released tomorrow. So whether does these results able to stand, we have to wait for the results for tomorrow. Okay, so now let's look at some of the future aspects or future prospectus that the company has laid out. So here I've took this from their past year 2022 annual report. Is because they have not yet released their 2023 annual report yet. So based on that, they actually focus on product innovation, where they introduce new applications for various different new industries. And this is what they mentioned in their annual report. They will continue to invest into their software by building new applications and also new features to allow more customers to use their software. So for example, one of it is actually the generative AI, which we saw earlier. So here it means that they actually can use simple language like the ChatGPT to help them to manage and also access data. So you can see that they can actually link up to various different softwares that's currently available and then link them together with the C3 AI software to use it together. Okay, so the next part, it will be the marketing. So here, they are mentioned that they are currently at the early stage of the AI, but because not many people are aware of C3 AI, most of the people know Palantir, but not C3 AI. So with that, they will continue to invest for brand awareness, market education, and thought leadership via the methods that's being listed out here. And they anticipate to make significant investments into the marketing aspect in order to establish their brands and also reputation so that more people get to know them and will be willing to try out their software. And next, international expansion. So they wanted to further grow their international customer base because in the previous 2022, we see that only about 20% actually comes from international market. Most of the revenue actually comes within the US. So here, how they are going to do it is by increasing their direct sales team within the international market and also supplement the direct sales effort to further expand their market reach. So these are some of the strategies that they plan for their future aspects in order to grow the company. Okay, so right now, here's the million-dollar question. Are they really a competitor of Palantir? So now let's look at the AI marketplace. So right now, we can see that there's actually a lot of different companies that are involved in the AI, and this is where Palantir is. Okay, so now let's look at how does Palantir can compete against C3 AI. So first off, actually these two companies, they produce software that are able to make a data-driven decisions, which means that they collect all the data, then help their employees to manage or to assess, analyze the data. So for Palantir, if you watch our deep dive series for the last one, you know that Palantir actually offers two main products, which is Gotham, that helps for government agencies, and Foundry, which is mainly for enterprise customers. So Palantir mainly, they collect a lot of data, and then from there, they analyze the data, and then they will see any patterns from there, then they will announce or let the employee know about this. Whereas for C3 AI, they actually allows their customers to design, develop, and deploy customized enterprise AI softwares. So this is slightly different compared to Palantir. So let's see how they actually fare against each other. So from here, I actually got this from the Palantir's investor presentation, because here they mentioned that they are comparing against the strategy and also offering. So offering actually refers to the products that is being offered by the company, and strategy is the plan that the company plans to carry out on how to achieve their business goal. So we can see here that C3 AI actually has a stronger strategy compared to Palantir, because if you've compared between Palantir and C3 AI, Palantir mainly is to collect a lot of data, help them to analyze, and then shows what are the patterns that is available, and also generate a predictive model for the users to decide what they wanted to do with the data. But earlier on, if you watch the demo video that's being presented by C3.ai, you will see that they actually, other than taking in a lot of data to generate the predictive model, they actually allows the customer to build their own AI models that suits their corporation needs. So with such, C3 AI has a stronger strategy compared to Palantir. But in terms of offering, Palantir has a much more solid offering compared to C3 AI, because C3 AI is mainly on the enterprise, but Palantir, they involve both the government and also the commercial aspect. And you can see that there's a difference in the circle. So the circle is actually the market presence. That means how many people are actually using their products. So we can see that actually Palantir has a much bigger market presence compared to C3 AI, which is why C3 AI says that they want to invest a lot more into marketing to build out their brand awareness. And next, let's look at their customer base. So for Palantir, we know that most of their customers are in the government and also inside the commercial aspect. And whereas for C3 AI, most of them are in the oil and gas industry. Okay, so here's the customer count for C3 AI's customer. So we can see that quarter by quarter, they has been increasing, but since the previous quarter, the customer count has actually stayed stagnant. And within these customers, here it shows that the customers are coming from which industry. And here total bookings is actually the sum of all of the revenue that they're able to generate in this quarter. And we can see that majority, about 72% of the customers are actually coming from oil and gas industries. And if we are to compare with Palantir, the aerospace and also defense took up about 15.7%, which is a much lesser compared to Palantir. So we can see that majority of them, they are actually from the commercial side. And now here's Palantir's customer count. So this is their latest quarter result, which is in Q4. And we can see that the customer count is actually increasing steadily year over year or quarter by quarter. And their commercial customer count is also increasing. And if we compare the percentage against the commercial with the government, the commercial actually takes up about 71.6% for Palantir. So you can see that they're actually growing from 184 to 280 customers. Okay, so now let's look at the financial numbers for C3.ai. Okay, so earlier on we see that the revenue is actually increasing. So this means that the company is able to generate sales and bring in sales into the company. But then when we look at their EPS, it's being shocking to see that their EPS is on the other way downwards, which is dropping downwards. And EPS is actually referring to, for the share that an investor purchased, how much earnings, but here is actually deficits that the company has. So we can see that the company is actually not profitable at the moment and is still losing money right now. And next, we wanted to look at their cash flow situation. So even though their revenue is increasing, but we wanted to know that how much of the actual cash is the company is able to bring into the company. And here, if it's a positive sign, it means that there are actually actual cash coming into the company from their business operation. But right now, it's negative, so it means that the company is actually losing money or is bleeding out cash to maintain the operations. So since the operation cash flow is going downwards, if we are to invest into this company, we will be wondering how long can this company last before they bankrupt or close shop. So another thing that we will look at is their balance sheet. So balance sheet is something like their own reserve. So here we will look at their cash per share. So cash per share means that, example is like a company, it's like a box. So within the box, when you open it up, how much cash does the company has? So this is a simple definition for cash per share. So here we can see that annually, the company is like quite steady for their cash per share. But if we are to look at their quarterly, we can see that since April 2022, it's been on a slightly downward trend. So it's a bit worrying for us if we are to invest into the company. So if that's the case, the next financial metrics that we'll be looking at, we'll be seeing about their debt. So here we will look at their debt to equity. And from what we see that their debt to equity is actually all zero. So based on value investing methodology, we wanted to see that it's less than 0.5. So it's been zero. So does this mean the company that has no debt, and is it a good news? So let's look further deep into the mathematical aspect. So here for debt to equity, we will look into their long-term debt and also their equity. So for long-term debt, we see that the company indeed do have long-term debt. And for equity-wise, we will look into their shareholders' equity. And shareholders' equity is actually made of capital and also retained earnings or retained deficits. So what does this actually mean? For example, if a company is being set up, they will need to have money to start running the business, right? But if the founder has no money, what are they going to do in order to set up the company? They will usually look for investors to get capital, right? So this is the first pile of cash that they have to start up the business, which is the capital. After the business has been running for some time, they will definitely generate profit. So the profit that they earn, they can either put a portion to give it out to as dividends, or they can keep the portion of the profits to grow the company. So this portion of cash that they keep to grow the company is known as retained earnings. So now let's look at their shareholders' equity. So here, shareholders' equity actually is quite huge compared to their long-term debt. But if that's the case, why is the long-term debt still, the debt to equity ratio is considered as zero? Because if we look further in, actually the company does not have any earnings at the moment. It's actually currently at retained deficits. Most of the shareholders' equity is actually coming from their capital. So this means that the company can stay afloat as long as they have capital. Okay, so right now let's look at what are the potential risks that the company has if you are interested in the company. Okay, so first off is their concentration risk. So currently, they are overly dependent on their major customer, which is Baker Hughes. So if they are to lose this customer, they will have a severe impact onto their revenue. Okay, so Baker Hughes is actually an oil and gas company. Okay, so here they actually says that when C3.ai went public, they are using this strategy called as a lighthouse, where they are working together with the major leaders in the industry to draw in smaller customers, as I've been explained earlier. And one of them is actually Baker Hughes. And Baker Hughes actually takes up about 30% of C3.ai's top line. So top line here actually refers to their revenue. So they estimate that about a third of their revenue still comes from Baker Hughes, which is quite huge. And actually, Baker Hughes actually renegotiated a lower annual revenue commitment with C3.ai. So with that, it actually means that it might have slight impact on their revenue. And the Baker Hughes actually invested into C3.ai's competitor. So Augury is actually a technology company that is also producing artificial intelligence to help diagnose any malfunctions within the machinery. So if they're investing into Augury, so that means that a portion of C3.ai's revenue is being given given away to their competitors. So with that, it raises up the question is that what will happen to C3 AI if Baker Hughes is to stop their subscription or stop their services with C3 AI? This is a very interesting question to think about. Okay, so now the next risk will be, is C3 AI a potential AI stock or is actually being hyped? So here, we will look at 3 aspects. The first one is the company name change. And then the second one is there's been 4 CFO being changed for the past 3 years. And also, there's a slight change in their business model as well. So now let's look into it. So the first one is the company timeline and also their name change. So the name of a company, it actually reflects what the company is, who are their customers, or what are the products that they actually offers. So now, the company actually set up in 2009 as C3. So their main aim is to manage the corporate carbon footprints. An example is that when you're taking an airplane, there will be some carbon footprints being released. So this company is actually set up to manage this type of carbon footprints. So you can see that from their name, C3, C stands for carbon, 3 is to measure, mitigate, and also to monetize all these carbon footprints. But then, in 2012, they renamed as C3 Energy. It's because the oil prices, the oil production was surging, and they actually offers data analytics software to this oil industry. So you can see that actually 72% of their customers are from the oil and gas company. Then they rename again their company to C3 IoT, which is Internet of Things. So Internet of Things means that any technological devices they can connect to Internet, and by using your phone, you can actually use it to manage or to control all these technological devices. I believe that most of us are aware of the IoT or Industry 4.0 during that time before COVID. So this is when they changed their company name to C3 IoT. Then finally, back in 2019, they renamed again their company to C3.ai because AI has been the latest buzzword. And they forecast that with the AI, they are able to enhance the productivity level of the corporate. And finally, the question is that, will this AI stock has any potential growth? Okay, so let's look into the next aspect, which is they have changed 4 CFOs in less than a year. So here, since December 2021, they have actually changed 3 CFOs, and they are also being sued of this a breach of the fiduciary duties and also gross mismanagement. So these are the list of CFOs that's being replaced. And actually, this is not really a good news. It's because when there's a rapid changes in the CFO, they will affect how the company actually do their financial reporting. Because if we are to look at what is the role of a CFO, we can see that most of the role of the CFO actually involved in the financial aspects and also to report their financials of the company. So if there's a frequent change in CFO, it will also change in how they manage their KPIs of the company. Okay, so one of the examples that I managed to find out is that there has been an inconsistent operating metrics, which is their customer count. So it actually changed the way how they define the customers. So they are going from the total companies, which is on the organization level, to the division level. So that means within the company, there's a lot of different types of divisions. So if let's say the company is one customer, but within the company, there's like 5 divisions and 5 divisions are using the software, does this mean that it should count as 1 or it should count as 5? So now here, if they count as 5, they are actually inflating the number of customers that are using their software. So now let's look at their definitions in their annual report. So here they count as a customer for each distinct division, department, business group as such. And as long as their customer using their software, they include such customer as their end customer in their customer count. So with that, it will raise up some questions that how many customers do they actually have? And the number that they reported, is it really based on within a company or within a division? So for Palantir wise, I have a quick check. They're actually counting their customers on an organizational level, not on a division level. Okay, so now changing business model, which is another big red flag. So here, previously they are using the subscription base, which is they are engaged with the lighthouse leaders to use their software, and then they pay them as a subscription base. But right now, they are changing to a smaller contracts and moving away from their lighthouse customers, which allow for a more flexible usage-based model. So that means whenever the customer uses the software, they only pay for it instead of they pay per subscription based. So this is the prediction that they have. They mentioned that for each quarter going on, the subscription revenue will stay mostly stagnant, but then the consumption base they predict will move up exponentially. It's because that when there's more people using the software in a smaller contract, the revenue is able to generate it more. But then there's also people raise up the question is that usually all this type of software company, they will prefer to have larger customers and also in a subscription base, because by subscription base, it means that their revenue is being locked up and they have a steady revenue stream. But if it's on a flexible usage base, if the customer decided not to use the software, then they will lose out their revenue. So it will also means that the revenue stream might not be stable at this stage. Okay, so finally, it's accounting fraud. So here in this article, they actually says that C3.ai is accused of accounting fraud. So in what sense? Here they mentioned one of it, which is inflate their revenue. So how do they inflate their revenue? Is to book fictional revenue with the accounts receivable. So here, accounts receivable means that after the sale has been made, some businesses, they will allow credit to the customers, which means that the customer can pay them back for the services or the products that they got after like 60 or 90 days. So here we can see that their accounts receivable is actually increasing, which means that they are pending payment from the customers, which is quite a lot, is increasing. But then if we look at the actual revenue, it's actually staying quite flat within the same period of time. So with the revenue flat, but the accounts receivable increasing, it might not be a good sign. It's because that the company is not able to collect payment from their customers. So if we look at their quarterly chart for the revenue growth, revenue is actually on an increasing trend. But if we compare in terms of the growth on quarter basis, we can see that it's actually going downwards. So this is a very troubling sign that one needs to take note of. Okay, so to conclude all about this company, some of the pros is that it has a direct exposure to AI and also machine learning. So we can see that the software that they offer is actually involved with AI. And they have partnerships with the industry leaders like Baker Hughes, Shell, and also Bank of America. However, some things that the investor need to take note is that the company currently is still not profitable, is still losing money. And there's a concentration risk because majority of the revenue actually comes from Baker Hughes. And also earlier we have raised up that there's been a frequent change in name and also the CFO. And the company has also been accused of accounting fraud. So with that, this is what we found out about this C3.ai company. And I hope you have enjoyed today's deep dive session, and thank you.
Hi, ladies and gentlemen, welcome back. Now I'm sharing the screen, right, of Hillary's last slide, which is the pros and cons. Now, is everything all good? Yeah, is everything all good? Okay, good. Now, you may notice that the Hillary has really spent a lot of effort talking about what's AI, and then we're playing the video to show you how AI can help. Now, it all sounds like flowery, right? Everything looks quite nice, huh? But the reality is investment, we have to do a comparison between the risk and reward. So in case if you watch any form of videos and then they tell you only the good things, didn't tell you the bad things, I think that's really a red flag. So if you look at Hillary's last slide, in which she talked about the pros, yeah, all these good things, partnership and so on. But the cons, right, which is quite worrying. Number one, not yet profitable. Remember, if a company is not profitable and then they try to expand, you only destroy value. Yeah, destroy value. It doesn't make sense for a company to expand when they are not even profitable. Yeah, this is quite scary, huh? Yeah, but of course, investors want to pass them the money to burn, right? Then they can do it. So here, there's a concentration risk, which is the oil and gas. And Hillary talked about this company, Baker Hughes. Yeah, and this is something that if you have concentration risk, you lose money, maybe still not that bad, right? So maybe your management is only incompetent, right? But the moment there is accounting fraud, it's not only incompetent, it's dishonest. Yeah, so you really ask yourself, regardless of what people say and what kind of hype, remember I provided a hype cycle, people talk about AI, it doesn't really matter. At the end of the day, when you plow your hard-earned money into a business, you want your money back. So now the question is, if you look at the pros and cons, assuming they put 5K, 10K, 100K, will you get your money back? Okay, huh? So that's a question you have to ponder through, right? So what I'm going to do is I'm going to show you two slides. In our previous YouTube live, I also shared this slide before, but I'll just show you one more time. Now, if you look at this slide, let me explain what it means. What it means, right? This blue line, right, represents the share price. This green line represents the company's profit, if any. It could be a loss. So in this case, if you look at this green line, you can see this number over here, right, is a negative. So negative, 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 negative. That means since this point over here, as this green line drops, right, the company has not been profitable. Not only that, the losses increases because it becomes more and more negative. Yeah, until only recently, it sort of like flattened out. Okay, so now remember this green line for this company is not profitable. So in this case, it's increasing losses. I just put a few arrows, increasing losses. Yeah. But the interesting thing is, in the stock market, remember, stock market do not behave rationally. And it doesn't behave rationally because most people who buy stocks, they have no idea what they're doing. Yeah, which is why it doesn't behave rationally. They are totally irrational. So the moment people hype about this, this is going to be the next big thing. Remember the hype up cycle? Hype up cycle, right? Remember this phase over here, this share price over here, represents the trigger. The first phase of the hype cycle where the company come up with something new, they talk about this, I got that. Yeah, and then after that, media start to jump in, they talk about a lot of things, social media talk about it, somebody run YouTube ads, say that it's a super stock, and then it reaches here, right? Yeah, so here is the reality check. Yeah, so at this point, there are some people who bought the stock. I just put bought the stocks, right? They may be wondering, why did I buy the stock when a company is losing more and more money? It doesn't make sense, right? Why are you paying more and more money for a company that's losing more and more money? It doesn't make sense. And if you look at this phase over here, right, you may notice that here is a period of bull run. It's also during this period where everybody's a genius. Everybody take money, toss into any stocks, price will go up. Yeah, and the human nature is when they toss into something without knowing anything, and price goes up, they will think that they're right. Yeah, this is the most dangerous thing. Yeah, so the most dangerous thing is not that you know nothing, is you only half know. Yeah, this is very dangerous. You only half know and you thought that you know fully. So in this case, people jump in, no hype, and then reality check. Yeah, and then it drops. Obviously, it has to drop because the company is not making money. Now, the reason why I want to share with you this is there are many scientific studies that have shown that eventually price will converge to the value. So what does it mean? It simply means that when a company loses more and more money, Yeah, in the long run, the price has to fall. Yeah, there is no such thing as the company lose more and more money and the price go up perpetually. It doesn't make sense, right? So one day, even if it goes up temporarily for 1 year, 2 years, one day it has to come down because it has to have a reality check. Yep. So this is one great example where the company is losing more and more money. People get into the phase 1, phase 2 hype. It goes up, reality check, goes up enlightenment, and then it drops, and then it converges. So right now, do you realize that here it converges? Yeah, here it converges. Yeah, so this is a company called C Limited, ticker symbol SE. Remember this company called Shopee? Shopee is a subsidiary of C. And I still remember very vividly during this period of time, people were on social media were boasting that's a super stock. Yep. So we must understand that revenue is vanity, profit is sanity. Yeah, there is no point pumping more and more money into a company that keep losing money, right? And then the future, the end of the tunnel, you may or may not see the light. It's quite dangerous. Yeah, so this is C. So in this case, this slide also shows that the market is very inefficient. Yeah, sometimes the company don't make money, but the price go up. But if you look at the company that we're going to talk about tonight, that we have talked about tonight, which is the ticker AI, right? C3 AI. So this is more efficient. So do you realize that the green line, right? The green line, which is the company's profit, actually it's not profit because it's still losing money. Yep. So Hillary already said that the company has not been making money, you see, losing more and more money, right? So in this case, I think the market is more enlightened. So you may notice that the price keep dropping. Yeah. So I think in this case it makes sense. But remember, right now the share price is 32. So what does it mean? It simply means that if you toss in $32, you're buying a company that has not made money yet. Now, whether will it make money in the future, nobody knows. Nobody knows. So let's play a simple game, right? Previously we have played before. Maybe we'll need Susie's help. So you may notice that here is a risk-reward framework. It's very important. Yeah, I mean, as investors, we have to be very scientific about things. You always want to ask ourselves, if things will go right, how much will you make? Yeah, if things go wrong, how much will you lose? This is very important. But most people, gamblers, right, they never think about how much will they lose. They only think about how much will they make. And they are blind to the loss part. This is quite interesting. Yep, so let's come back to here, right? So let's say there are 3 baskets that we can select, 1, 2, and 3. And remember, specifically, we're talking about this company, ticker C3 AI, right? Now, do you think that C3 AI is a low-risk, high-return investment? Or do you think that the C3 AI is a high-risk, low-return investment? Or do you think that C3 AI is a high-risk, high-return investment? So there is a poll, right, that's being placed on the YouTube live chat. Yep. So I just need your help to just select the poll. Yeah. From my angle, I couldn't see actually. Yep. So once you have done a poll, the results will be out. So yep. So all of you will be able to see the results. So remember, first one, low risk, high return, high risk, low return. So while the poll is, ongoing, right? Let me just share with you what Charlie Munger will do. Now, Charlie Munger has once said that as a value investor, ultimately we want to choose basket 1. Yeah, I mean, of course, we want an instrument, right, or investment that's low risk, high return. Yeah. Okay. Who is going to choose high risk, low return, right? Or this one confirm lose money. Confirm lose money, high risk, high return, for at least from Charlie Munger's perspective, is he find too difficult. Yeah, it seems quite interesting, but it's too difficult. So in other words, basket 2 and basket number 3, right, will be a no go for him. Yeah, so he will only choose basket 1. Yeah, so for me, at my age, I'm already 52. I think I will not play the basket 2 game. Basket 3, I think is too dangerous. Yep. So for, like you queue up to buy a lottery ticket or Singapore Pools, it's actually basket number 2. It's actually a high risk, low return. Yeah, but people don't mind because in their mind it's $1 only, $10 only, $5 only. But if they accumulate this $5, $10 over a sustained period of time, actually it's quite substantial. Yeah, people they don't see, right? They don't see $5. $5, right? They don't see, Yeah. So I think the results should be out pretty soon. Yeah. Usually there's okay, good. Yeah. So anybody say low risk, high return? If you look at the chat, it's 0, high risk, high return 50, high risk, low return 50. Okay. Yeah. So remember, basket 2 and basket 3 from the Charlie Munger's perspective is a no go. But if you want to go, then it's okay. because it's your money, right? Okay, good. So tonight we talk about the hype cycle right in the very beginning, and then Hillary has painstakingly trying to tell you something so complex called AI using one company called C3 AI. She has also done a lot of work to compare it with Palantir. Palantir, they are like close competitors. Yeah, Palantir, right? Yeah. So at the end of the day, this is my perspective. You don't have to agree, right? At the end of the day, AI, IA, whatever you call it, I still have to go to my nearby supermarket called Sheng Siong NTUC or Cold Storage to buy something. Yeah. So out of the companies, if I want to invest in companies that is predictable, because when a company's profit is predictable, share price is predictable. So if I could choose between C3 AI and Sheng Siong, I think I would take Sheng Siong. Even though if I sit down have a conversation with my friends, they may think that I'm very lame. But it doesn't matter, right? As long as my pocket has money, so it doesn't matter what people say. So remember, right? Whether you make $10 for C3 AI or you make $10 from Sheng Siong, the $10 all smells the same. Yeah, investment is an individual choice. Yeah, we don't have to how should I say, succumb to other people's opinion why we buy Sheng Siong and not C3 AI. Okay, Yeah. So what I'm going to do is I'm going to end my segment or end our segment into a very important class that we're going to run on the 8th of June, Thursday, 7 p.m. to 10 p.m. Now, let me share with you what is this all about. Ultimately, I mean, at least from my 20+ year experience and from the 50,000 people that I've spoken to across 11 cities in the entire Asia, right? Most people actually, they do not know how to invest. Yeah. I don't think it's a bad thing, but the key thing is it will only be bad, right, if for those people who do not know how to invest, they pump their money in and then they continue not to know. I think this is quite dangerous. So one of the key reasons why we want to run this YouTube live and then we spend so much time talking about all this is because we want to educate people. So this class is a game we want to educate you, but this is really unique in the sense that, number one, this is done on site. Because if you are watching our YouTube live, you may not have seen Hillary in person before. So this is also a chance for you to chit-chat Hillary. So it's on site. Now, then the second thing is, for this on-site event, is a no sales. So in other words, we are not going to sell you anything. It's a no sales, non-profit event. Yeah. So number one, we're not going to sell anything. Yeah. So you can feel better, assured, right? Now the venue of this event is 3 Shenton Way, Shenton House, Shenton Way. This is our office unit. So don't worry, right? The link has already been posted on the chat. If you click on it, you fill up the information. I think there's a $10 charge. Now, for the non-grads, don't click first. For the grads, don't click first. For the non-grads, if you're not our grad, right, please click on the link and then you register. Just to let you know that the fee is $10. And the reason why we put $10 for 2 reasons. Number one, we want to donate this $10 away. Number two, $10 is really for us to know whether are you really coming. Because if it's free, usually people, they don't care, they don't come. So we prefer to spend time with those that matters. Yep. So for those people watching this, if you are non-grad, click on the link. You can just register your name and so on. Just make that $10 payment. Now, the interesting thing about this part is also every single month we are actually running our gathering strictly and exclusively only for our grads. So only for June. For June, we are opening up for non-grads, for people like you, in case you're non-grads. So that you know, for those people who graduate from our course, this is how we continue to support them. In fact, we have been supporting them since June, right, 2010. Yeah, 2010. So it's how many years? Oh, it's 13 years already. Yeah. So usually for such event, it's only exclusive for grads. But this time round, we are opening up to you. Yeah. And because we are opening up to you, we're going to make things very structured, very easy for you. And we call it empower your financial future. Here the word is on site, so that you can build your portfolio in just 3 hours. Now, when we say this, we are not kidding you, right? Because in a portfolio predominantly consists of 3 components. One is the cash component. And in this cash component, Hillary will talk to you one instrument that is licensed by AMS, that is issued by AMS, how you can invest using this instrument. So Hillary will talking about this part. Then the second part, right, will be our ETF. In case you're a grad, you may be thinking, okay, then maybe it's going to talk about S&P 500 again. But this time around, I'm going to talk about something else. So it's more refreshing for you. So I'm going to talk about ETF. Yeah. Then Elijah, right, is going to talk about one local company. Now, I don't want to tell you what first, so we keep you in suspense, right? So by filling up these 3 parts, by providing you with the resources and knowledge to fill up these 3 parts, actually you can form a portfolio. Yeah. Then, of course, for this part, as you grow to become an investor, you can sort in more and more companies. So remember, for non-grad, it's only $10. $10 collected. We're going to donate all to National Cancer Center Research Fund. And then if you're non-grad, you want to register, right, for on-site gathering, how do you do it? Yep. So just now I talked about this 3 portion, right? Yep. Hillary is going to talk about T-bills, right, treasury bills. Yep. The Elijah is going to talk about a local bank. Yep. So, but we don't tell you which are the banks. I'm going to talk about ETF. So these are 3 things that we're going to talk about. The link is already there for non-grads, right? Remember, just click on the link, just fill in the information. But remember, it's $10, assuming that you didn't come, right? This $10 will be donated away. There will be no refund or postponement. Yeah, because this is a one-off thing, right? So here you can see that the proceeds will be donated to National Cancer Center Research Fund. Now, and then for those people who are grads, you want to attend our monthly gathering on site, which is this event. How do you do it? Now, you just need to refer to our Facebook closed group, right? There will be one post that looks something like this. It's already pinned up. Yeah, pinned up as a featured post. You just need to go back to the post, right? And then click on this registration link. Yeah, registration link, Yeah, so once you click on it, and then you can come for our class. Okay, got it? So remember, I'm going to wrap it up with just maybe 1 minute, right? I think investing, the very important thing is you have to fully understand what you're doing. And Warren Buffett called it circle of competence. It's okay that we do not understand. If we do not understand, we skip. AI, we do not understand, we skip. Meta, we don't understand, we skip. It doesn't really matter, you see. So nobody knows everything. Yeah. So remember, it's okay for us not to fully understand. So what do? We skip. The second thing is, remember, the more unpredictable the company is in the future, the more unpredictable the company is, forgot one word, right, is in the future, the higher the chances that you're going to lose money. Which means that conversely is true, the more predictable the company is, the higher the chances that you're going to make money. Yeah, so just take note. And number 3, remember, never make a decision purely based on what others say, and that includes us. Yeah, if you look at the things that we do, as much as we can, we provide details, qualitative and quantitative, but you need to know there is no other way out but to be an intelligent investor. So with that, this is my last slide. Remember, if you just follow other people, what other people say, whether they are dark genius, count genius, or whatever, right? Remember, if we do that, we are all lemmings. Lemmings are very dangerous. So you can see, stock market, people say buy, you buy, people say sell, you sell. Have to be very careful. And if you look at the number 1 most successful investor of all times, Warren Buffett and his vice president, Charlie Munger, right? People like them, they all want all of us, me and you, to become an intelligent investor. So with that, ladies and gentlemen, just to let you know that me, Hillary, together to our colleagues, we represent VIA, and VIA is Value Investing Academy, and our mission is we care to make you a better investor. So have a good rest, everyone. So I shall see you. So Jen was saying a broadcast. No, there's no broadcast. Yeah, so you have to come. We force you to come. Yeah, okay okay what to do? Can't come then bo pian lah. Okay okay, the link is there. So I shall see you soon. Okay, goodbye. You got any question? Please feel free to post inside. Even if we end this YouTube live, we can still answer that question. Okay, see you. Goodbye.